Trading setups. The setup has to be repetitive, so it has to recur over time so that you can have many possibilities to trade it. Has to be easy to spot it, so it doesn't have to be super complicated, but you have to see it at a glance and then trade it. And the setup has to be, of course, profitable. And how you can do this? Only if you track that setup over time and then you back test the strategy. When I talk about playbook, remember always that playbook is formed by a pattern. It's formed by risk management, a plan, and also rules. Today we're gonna cover some of the small cap setups that we trade in our room since 2017. As you know, since we started to analyze what the market was doing, we started to track the setups. And we have about 10, 11 different setups, both long and short. Today we're gonna cover a gap and crab. So essentially it's a gap that on day one tends to fail all the way down. We're gonna cover extensions. There are many ways that a stock extends. Could be pre-market, could be at the open, could be during the day or day two. And then we're gonna cover even one long pattern for all our friends that love the long pattern. So enjoy, and if you have any comments or questions, please reach out. We're going to talk now about one of the best long plays. And this is what I call the J-line curl. So it works with the J-line confluence. We will see the patterns over here on different stocks. I want to give you an example of when to start looking for these trades and the solidity of also this pattern. As you can see over here, we have a morning open. So we can define the open over here on our gap. And then we have an immediate flush, right? And this is very important. Often you will see these levels over here of fib that are holding actually the price. So price opens and then it fails over here. And this is 50% fib retracement. We have again a push. You can see this extension to the pre-market high. This is one of the setup that I like to trade short, is actually a gap and grab with extension to the pre-market high and fail. But where I want to bring you is more the midday or could be even mid-morning consolidation. So you will see a lateral phase where the price actually doesn't unwind. And you can see here, we're holding over here the 50% fib and we don't unwind, but instead we start over here to make higher lows and higher highs. And at this point, we start seeing the breakout, okay? So now let's look at things with a different perspective. Let's take over here off our fibs and look how the price over here reacts. So we have the support. In this, you can see a distribution pattern. Price over here breaks, but instead over here reclaim this level, and then you can see it consolidate more. And at a certain point, we have this breakout. So we break that mid-morning, or in this case, midday consolidation, and we extend over here from 135 until over here 265, okay? So we extend for about over here 135 to 65 for about almost 100% move. Now I apply the J lines, and you can see how perfect they come with the new trading system. Also, you will see over here when to take the long, so it will actually give you an input, an alert, an arrow that gives you long. And this is our long play where we can enter on this dip. You can see multiple times over here we hold a dip. And then also we can add on the break over here with the volume. And that's an extension play. Even day after, you can see over here, still this example, we have the price holding and pushing back up again for a secondary, okay, extension play. Another example over here. So we can see in the morning we have our gap, pop and fail. It breaks the pre-market high, and then we have a secondary fail. Now you would expect the price to go all the way down because this is the level actually where we have the bull trap, okay? So longs are trapped. We will see the stock over here fading. And we actually have this breakdown, just like in the example before on RMD. This is 8SCS. We break down, but again, it starts holding. Start holding our J lines again. And then we have this breakout over here. And you can see the volume rising. Again, where I can long on the dip of the J lines. I can start adding over here liquidity. So adding over here more size. And then again, a push to the upside. Always using those J lines for the entry. Same setup over here. We have a morning dip. Price starts pushing. And again, of course, we can start deciding over here to long on the dip. But what I want to share with you is that we'll see often that push and that retracement. And that's your mid-morning over here consolidation, where we can start to take the long into the J lines. Of course, over here, we'll see confluence. I want to see support. I want to see order flow, tape. I want to see fib. And then on this breakout, I'm going to add more size. And again, this was another more than 100% move. And this happens with volume. So you want to see that increase of volume on these moves, right? So look to use these J lines to take these extension plays together with the volume. Another example on COSM, you can see the midday, or in this case, midday consolidation. You can see that price over here is very choppy, so we don't have any kind of range. We have over here the reclaim of the J lines, and then we start having this cut pattern over here with the increase of volume, and exactly here's the level where we start looking for that long play. And again, another move to the upside. So we can start taking our long position over here, and then you will see subsequently another dip into the J lines. Another dip to the J lines.
Hey, this is Jay. I'm taking a quick moment today to explain you on how to set up your elite trading account with Zimtra. This isn't a simple account, but I've put together the best trading advantages for day traders. First of all, up to 20 buying power, up to $1,000 in starting credits, and also free ECN routes. I've also put together some exclusive perks like 3 months of mentorship included directly with me, 50% off of private education, and also free access to small cap room once you exceed 2 million in volume traded. Well, click the link in the description and set up your trading account.
And here's where I can recycle for the long play. Again, each time you see these dips, you want to see the volume increasing. You want to see again the volume increasing. You want to see the volume increasing. And then, of course, you have to look at the price action, but that's exactly how extension plays work. We're looking now into a stock that was in our gappers above 30%. We can see AMD. We're going to talk about right now the first pattern of today, which is the gap and crap. So gap and crap is a stock that ideally has low cash, ideally has a history of dumping, so fading on day one, ideally has dilution on, and has bad fundamentals. So all these things together start to give us an idea of where the stock will go today. Remember, this is a gap and crap pattern that we have tracked and backtested since 2017. There will be more parameters that you can learn, and you can reach out or simply step in our JTrader code room to see all these trades called and alerted live. First of all, we look with JTrader. Of course, we're going to have it over here on the scanner. On JTrader, I will check the float. We have a 2.7 million float, so this is a very small float, and this means that with very good volume, can be easily flow rotated in pre-market, because often we'll see stocks that open already with 3, 4, 5, even 10 times flow rotation. But it doesn't mean essentially, and this even backtesting it, that with flow rotation a stock necessarily has to go up. We have to, as I say, always make a forecast and then check the primary important parameters, which are the price action, the volume, okay, and really the agenda of the stock itself. We're going to read the news. We can look over here if we have news. And that day, so we're talking over here of the 14th, of the 12th, we had the news. Always read the news. If the news is fluff, recycle, regain compliance with the stock market, etc. This is the news of the company. It came out over here June 11, 2024. Effect of what? Of an S3, okay? And if you know, trader, what is an S3 effect means they can actually use their offering in order to raise capital. So through dilution, the company will continue to survive. The second aspect that I'm looking at is what happens when the stock has a day one gap, and we can see over here with at least 20% gap or at least 1 million volume traded in the last 5 years. That about 85% of the time, okay? Of course, now we will need to subtract because this video is recorded 2 days later after that gap. So we gotta have to subtract 1, but still the percentage over here was above 75%. We have 75% with average high of the day 949. So it means that in the first 30 minutes, this stock will have the high of the day. With a general, we say average extension from the open of 11%, but you can see that this likes to unwind twice more, 23%. So it's a stock that has history of fading, is a stock with bad fundamentals, is a stock with also a history of dumping that you will see on the chart with overhead supply. This is using TradingView, is part of our trading system. We're going to release a full trading system soon that will help you to trade. And we're going to look for now into the daily chart. And I just want to check over here, at least the last 1 year, what happened when the stock had a first day one gap. So we can see that over here, this was in March 2024, the stock gapped, extended, and then failed. This instead was not a gap, but it extended and then failed. This was a gap. Actually, it was not a gap because you can see that we didn't open with a 30% gap. And what it did over here, extended and failed. This is the last day, the day that we're talking about. So we have a stock that likes to extend, right? But it's a stock also that it tends to give all the way back. And I'm looking also at key levels. So the second thing is going to be looking at our key levels. And I'm going to put days where we had high volume traded, the high and the low. So this is the day where we traded high volume. You can see that we have a high at 4. And this is the low at around 220. I'm going to put over here another resistance on this day. So this is the high around 969. I'm going to put also over here low. And we have this. And then I'm going to look for other, we say, levels that could be important, like technical levels, where, for example, we have the reversal. So let's check our chart. We can also put this level over here at 5, because even if we didn't trade a lot of volume, this was a relative high over here. You can see that rejected. And even back in the past, even if we had a reverse split over here, even back in the past was still a level of importance. Another thing that I suggest you to do is you can put also a volume profile that I use, and it will actually show you the high volume node and low volume node. So the areas where we traded more volume, but I will keep that for, another lesson in the future. And a tip that I give you, check also your charts, not only the daily, but check the chart also with an hourly or a 4-hour chart, because you will see on the daily, of course, those levels of pre-market and after hour, which are important. Now, these are the general levels that we've put, all right? So we have, there we go. We want to see the last day. So we have a level over here around 390. We have a level over here around 215, a level over here around 515. And then over here, we have a level around $9. But what's important over here? So we said that the float is small, right? We said that the float of this company, traders, is about 2 million. And now we have to look where we have traded this volume. So we can see that a lot of volume was traded on this day, because over here we have the volume of around 44 million, or this day over here, around 100 million. So it doesn't mean that being that we traded 40 million and 100 million, we have 160 million of overhead supply of bag holders, because the float is actually a couple of millions, right? But of course, we'll have traders, longs, okay? So who bought this company? There's actually a bag holders, maybe traders that bought over here 620, or traders that over here bought on the level over here 7. So we have an overhead supply, all right? And this is very important. Now we're going into our chart. We have two charts. One you can see is a simple chart, and one is a full systematic process. They will give you the setup to trade, and we can see this, for example, over here. So exactly, it will tell you what setup to trade and where to trade it. In this case, gap and crap. It will tell you to trade a short, and it will also give you alerts over here where to take the trade. Again, let's stay with the easy over here. We say template. So you can see that the gap this morning, that morning, went from 0.85. It held over here the VWAP, so this red line. And this is always very important to have in your chart, because you'll see where traders are looking to buy. Generally, traders will buy on a 20 MA, 13 MA, or 9 MA. Being that we use a 1 or 3 or 5 minute chart, or they will buy above the VWAP, they will sell below the VWAP. In this case, we have multiple over here indicators to help you, okay, understand the price action. But if we have to think in terms of price action, how gap and crap works. Gap and crap is simply this kind of price action. You'll have a gap, price opens over here, it can dump directly, or it can pop over here and then to dump. Remember, on stocks that, as we said before, have those parameters. So over here in pre-market, we can see a double top. So often we will see this. So that's the first thing when you trade pre-market, and this is going to be in another course. Never short the front side of the move, but instead look to buy the front side of the moves. You can buy the VWAP, you can buy the 90 MA. The pattern is simply over here. So once the price opens over here 930 below the J lines, right? So there's 72 and 89 EMA that we can use on different products, different assets, and this is based on the Fibonacci numbers. We will have over here this opportunity to short just when the price starts to give back. So in about 115 area over here, the risk that we'll put is going to be 117. So we're going to risk about 5-7 cents at the most. And then our target is going to be over here, the 200 EMA on the 5 or 1000 EMA exponential moving average on the 1 minute. And we can calculate definitely the R. So if we're going to risk over here, let's say 5 cents, and the unwind over here is going to give us something like 25 cents, we're going to work for 5R. Now, 25 cents won't maybe look like a lot, but I can tell this was very, very liquid. You can buy 30, 40, 50, or sell short 30, 40, 50 shares, K shares. In this case, 25 cents is going to be, your good profit for the day or even for more. A few things to look at also. So we want to see a push. These pushes can hold and do like this, right? So you always have to look how the price reacts at these levels. And then we can see that when we start seeing this major seller, okay, one of my indicators shows you the big selling pressure. And then over here, more selling pressure. And that gives you confidence to hold the trade for the short side. So in this case, remember, gap and crap, we have fluff news, we have a history of fader, overhead supply, stock bounces, fails, and then you're shorting and you're looking for at least that 3 to 4R trade return.